Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
How's it going, investors? Hi, I'm Anjz, an equity research associate from Securities, where I cover the consumer sector. In this episode of Market Bites, I bring you the latest company update on Emperador Inc., titled Earnings Outlook on the Rocks. We are downgrading EMI to fully valued, with target price cut to 16.20 pesos. Following the miss in EMI's operational performance in 1Q24, we have cut our earnings forecast by 26% for 2024 and 2025. This is to reflect tempered growth expectations in the next 2 years, owing to the following. On one hand, Emperador's positioning is challenged in the local spirits market amid changing consumer tastes and preferences. This has led to declining category volume sales vis-a-vis other spirits led by Emperador Brandy, which has been recording lower year-on-year volume sales since 2014. In the near to medium term, we see EMI's domestic market positioning as unfavorable on account of the following. First, competitive pressures in the domestic brandy space. The premiumization narrative has resulted in brandy drinkers pivoting to more expensive imported products. This presented an opportunity for competitors such as Alfonso Spanish Brandy to generate a following in the local market in 2018. After imported liquor distribution company Keepers Holdings Inc. acquired a significant stake in Bodegas Williams and Humbert S.A., a 140-year-old winery based in Jerez, Spain. Based on Euromonitor data, Alfonso Brandy has since doubled its market share to 8% of total domestic brandy volumes in 2023, having sold 16.1 million liters. That's 10.2% 5-year CAGR during the period. To address competition, management recently launched Fundador Super Special, aimed to directly compete with Alfonso's positioning. The new variant is more competitively priced vis-a-vis Fundador Brandy's existing lineup, according to management. Second, trading down to value for money spirits alternatives. Prolonged cost of living pressures has also pushed some consumers, especially low-income households, to shift to affordable alternatives such as gin and rum. Euromonitor data show that Emperador's top competitors within the spirits category managed to report volume growth in the last 10 years. Ginebra San Miguel Gin, at 8.5% volume CAGR, now accounts for nearly 45% of domestic spirits volumes, while Tanduay Rum, at 4.4% CAGR, had secured roughly 24% last year. During the same period, however, Emperador Brandy reported declining volumes, with its share of the market falling to only 21% in 2023 from a sizable 44% in 2014. Accordingly, we expect prolonged weakness in EMI's brandy segment and forecast negative 2.4% growth in 2024 revenues and 3% growth in 2025 revenues. We also baked in a marginal EBIT margin contraction this year to 15.23% amid weaker pricing power and elevated A&P spend to help arrest a decline in market share. On the other hand, global macroeconomic concerns are now weighing on whiskey sales performance. Whiskey segment delivered 17.2% sales CAGR in the last 3 years, outpacing brandy sales, which is at 2.7% CAGR. In 2023, the segment accounted for 39% of revenues and 57% of attributable net income. Until recently, demand for whiskey has been resilient amid support from accumulated savings, positive tailwinds from China reopening, and the recovery of global travel retail. In 1Q24, however, whiskey turnover fell 10% year-on-year to 5.2 billion pesos. Management attributed the decline to a weak global spirits market during the period, particularly in the UK, US, Europe, and China. At this juncture, we think that macroeconomic headwinds will continue to weigh on the consumption of discretionary products such as alcoholic beverages. Therefore, we are of the view that the premiumization narrative could pause as buyers cut back on purchases or trade down to lower priced products, thus lower margin variance within brand portfolios. Our forecasts now assume negative 0.7% and 9% growth in whiskey sales for 2024 and 2025 respectively. At the EBIT level, we see an 88 bp margin contraction on account of unfavorable sales mix and negative operating leverage impact in the face of weakening demand.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the FirstMetroSec family.
FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.